So your 401k is about to become a playground for billionaires, and guess who's the toy? So Trump is about to sign an EO that will allow us to invest in the private market with our 401k. It's like private equity, crypto, even gold, right? It sounds fancy, but it's kind of risky. See, normally your 401k is in stocks and bonds. Those are easy to sell at any time. But private equity is a liquid, meaning if the market dips, so you need cash, you can't just pull your money out. So imagine your money locked away for years. Private market investments charge way higher fees. Think 2% annual plus 20% of your profit. That eats into your savings, so even if you earn big, you still gonna pay big in fees. Now, your public stocks, they get priced daily, but your private stocks, not so much. They're opaque because you're mostly trusting the fund's inner numbers. That could mean overvaluing assets or even hidden underperformance. So the big equity firms are gonna likely own the best opportunities, and we get the scrap. Real investors might end up paying more for worse deals than the institution. Yeah, so it could feel like a chance for bigger returns. However, but you're basically giving up flexibility, transparency, and you're gonna pay more, while rich people still get all the perks. It is another move that favors Wall Street, not Main Street.
The Trump administration has announced they are finalizing an executive order which will now allow you, wait for it, to invest your 401k, so it's your allocations of your 401k into private equity. Do I need to explain why I say RIP to 401ks? Normally, some people would say, well, this is awesome because how many people have wanted to invest in private companies but can't? The average person doesn't get access to private equity. They don't get a chance to invest in what the big boys do because it's off market. That's how they're going to write this out. What this means is it's going to allow people who are wanting their 401k to grow a little bit quicker, thinking, let's go a little bit more risky, and they are going to invest in private equity. The reason that this is, in my opinion, this is happening is not for you. This is for private equity companies because they need your money to keep buying. And if they fail, they need your money because you don't even know what you're buying with private equity. Basically, this is going to turn every 401k owner is now going to have a LinkedIn profile who says they're also a venture capitalist. So again, I'm not here trying to police people. People have the right to do whatever they want with their money. But I feel like I already know that the reason that they're allowing this is not to help the consumer and the American person. It's to give private equity more liquidity.
It makes you wonder, in that room where decisions are made, who is in there for us? Who is in there with our best interest? We are the ones adjusting our cost of living. We are the ones cutting back to put away for retirement. When decisions are being made for that money that we are sacrificing and putting away, who is in there representing us who own the money? If you're looking at this objectively, though, the very first question you have is, how is this any different from what we're currently doing? Stock market is risky. So nothing guarantees we will get that 10% return in 40 years. Anything can happen. So how is this any different? How is this riskier?
I'm Vivian, your HBFF and your favorite Wall Street girly, and I teach you all the finance you should have gotten in school. Let's break it down. PE is no stranger to retirement funds. They've been a part of pension plans for decades. The big difference is that pension plans are where employers contribute to your retirement and have professional teams picking investments on your behalf, whereas with 401ks, you're the one contributing to your retirement and you're picking the investments. The benefits of PE are obvious: historically better returns than stocks, access to investments you otherwise couldn't get into, and portfolio diversification. On the other hand, though, PE doesn't have a daily price, so value's harder to gauge. Private investments are a lot less liquid than public investments, meaning you can't as easily sell out if you need cash for an emergency. And my hot take, I don't think the PE that these guys have been getting is going to be the PE that regular people get. Think about it like fashion. Giorgio Armani, Michael Kors, Vera Wang. High fashion designers that sell pieces for thousands to very rich clientele. Similar to how PE works right now, you're only allowed to invest if you're an institution, a firm with a lot of money, or an accredited investor, a person with a lot of money. PE firms know there's a higher risk of retail investors pulling their money at the first sign of uncertainty or needing that cash for an emergency, so they're going to have to build investments that account for that unpredictability. So what ends up happening? My guess, these PE firms are going to roll out the equivalent of Armani Exchange, Michael by Michael Kors, and Simply Vera to service Gen Pop, but the really good investments that require a stronger stomach and a longer lockup on your money, that'll still be reserved for VIPs.
This is actually a rule that is saying to the Labor Department, which oversees all the workplace retirement plans, the Treasury Department, and the SEC, to kind of look at the regulations in place that might allow these different kinds of assets into our workplace retirement plans. And these kinds of assets, as you mentioned, crypto, there's something called private equity. It's like basically being able to invest in private companies, which really previously is only for rich people, and also private real estate. So this would be a rule that would have to develop over time. There's no law that prevents this right now, but right now what happens in the Labor Department is they say whoever is the plan sponsor has to put assets inside of the plan that are in the best interest of the participants.
Okay.
And that's what we think is going to be loosened up over time, potentially.
So risk and rewards.
Okay, so let's start with the risk. Okay. The risk is that these are volatile assets and they tend not to be liquid, meaning that if you want to sell them, sometimes it's hard to get out.
Yep.
And also, there are big fees associated with these kinds of investments.
Oh, really?
I mean, really big fees. Now, maybe they'll massage it for 401k plans. The promised reward would be, hey, you're going to make more money like all those rich people. A lot of rich people tell me that the kinds of things that they're going to put inside of 401ks will sort of be the leftovers. So don't get too excited over that.
And here's the kicker. These are the same kind of investments that lock up your money for years and charge sky-high fees win or lose. You know how the rich can afford to take big risks? Because they've already got the millions in the bank. That's not us. We can't gamble with our money that we've been working 20 and 30 years to save for retirement. But this order makes it easier for Wall Street to dip into your nest egg and harder for us to hold them accountable if things go bad. They're even pushing to limit lawsuits against the companies that manage your retirement. So if a risky deal blows up, you take the hit and not them. And let's just be real for a second. This isn't about democratizing investing. This is about opening up a $7 trillion pool of American retirement savings to private equity firms, hedge funds, and political donors who are chomping at a bit for your money. They've been locked out for years, and now they're getting the keys thanks to the Trump administration. Imagine logging into your 401k in 10 years and finding out that part of your retirement was sunk into a real estate deal you never even heard of, or a private company that went bankrupt. You can't even sell it to get your money back. That's what's on the table. And the worst part, most people won't even know it happened until it's too late. So here's what you do. Watch your plan updates. Look for words like alternative assets, private equity, or real estate. Ask your HR or plan administrator if they're adding these investments. They're gambling with our retirement. And if we don't pay attention, we're the ones that will lose the game.
This is the same issue we had with investing in the first place with the stock market. Is an issue I had with the stock market. I did not like the idea that those who manage the money are a lot well off than those who were putting money in. And this sounds like it. Let's talk about the fees. So from what I found out, because I'm not an expert, your regular investment, be it index, ETF, or mutual funds, all that, you're looking at 0.1%, 0.5%, 0 to 2%. Your commission and advisory fee, you're looking at 1 to 2%, and then the flat rate. But with alternative investments, and we're talking hedge funds, private equity, venture capital, crypto, all that, alternative investment, all that. You're looking at a management fee of about 1 to 2%, and then performance fees up to 20%. 20%. Now, like she said, perhaps by the time this rolls out and is in play, perhaps they may change the rules when it comes to the fees. But it doesn't exactly make me comfortable when, from the get-go, I'm not hearing a voice standing up for us in our best interest. And then let's talk about the risk. I actually do not, I think the risk is worth taking if you're young and you have time, right? Because the bigger the risk, the bigger the reward. And if you can stomach the risk, you have a high risk tolerance, you don't mind it, then hey, why not, right? But my concern, based on what we've heard from two reliable sources, is that perhaps what is coming to us, to our 401ks, isn't exactly the same thing as what the big guys were getting, right? It sounds as though we are going to be the ones being experimented with, right? And the reason why I'm not so comfortable with the risk, regardless of age, is what is the penalty? Because when you look at it, it seems as though it's all rewards for the banks. and those who play with the money, and all risk on our end. There's reward. We can't promise reward, but there's 100% risk while they have 100% reward. And so if you don't give me the best end of the deal because you're giving me remnants, where is the consequence for you? The fiduciary part of it, are we still going to have the fiduciary part of it? Someone who is actually making decisions in our best interest? What do we do if we then see that the investments you made were rubbish and there were big gambles, major gambles that had little reward for us? Because you're not answering to the big guy who can afford to sue your behind, who can afford the lawyers from Yale and Harvard and all that to sue your behind. One of the reasons why there was regulation against the private equity, in addition to its risk, is also because it's hard for the fiduciary agent, advisor, whatever you call them, to show that their decision, if they were to invest in this private equities and private credit and all, to show that it was in the best interest of their investor, which is you and I, it would really open them up to scrutiny because it was that risky of a move. So what can we do? Can we do anything about this? Well, I think when this actually rolls out, we will all have the option to elect if we want to invest our 401k into these plans. If we want our 401k plans to include private equity or alternative assets, I think at first that's what it's going to be. But as time goes on, because we are not educated on these things, it would be just like when you signed up for your 401k at work. Unless you're financially literate on these things, you're just checking a box and signing away. You don't know what you're signing on. You trust the advisor, you trust the experts who are handling your money on behalf of your company. You trust them, and so you just sign away. And so over time, you're not going to know what you're investing in, and over time it's going to be so woven in that it's going to be part of every plan, because at the end of the day, you follow the money, right? And those who benefit out of that. So I think for now, yes, we may be able to, choose not to invest in it. But down the road, it's going to come down to financial literacy. And this is where I want to see a change in our education system. We need to be taught these things, just like how it is mandatory to take certain classes. I think it is mandatory to teach us about these investment classes, about what an ETF is, what an index is, what private equity is, what what crypto is, all that. We need to be taught. I think if we're going to be required, well, we're not required, but if we're given incentives to invest in 401k, we should also be given incentives to learn about these things, right? Because it's at the end of the day for our own good. Imagine if a lot of us have our 401ks and the equivalent. When I say 401k, it's all included. Perhaps there wouldn't be such a drain on Social Security. Perhaps there wouldn't be such a drain on Medicaid, because everyone on average will be well taken care of or will have enough resources when they retire. So in the meantime, keep an eye out for your 401k. Most employers, you'll be able to log in and select how you want your money to be invested, or like some of the videos said, and if it hasn't said it, I'll include it at the end of this video, that when you do get an email from HR, should you get an email from HR or from your 401k department at work, keep your eyes open to know what you're investing in. And you may be one of those who see nothing wrong and you'd rather go with a high risk because you want high reward, and that would be fine. But at least now you can make an educated decision on it and you know where your money's going. That is the key of every video that I do, is so you know where your money's going. Because at the end of the day, regardless of what side of the aisle you're on, regardless of what side of the aisle is in the White House, no one cares more about your money and no one will look out for your money like you do. You should trust no one except Jesus. You should trust no one with your money. All right, people, I'm out. Thank you all for watching. Just keep your eye on your money. I'll see you in the next video. Bye.